Discussing credit scores and what impacts them. The length of time that you've had a credit facilities and trades, things like lines of credits, student loans, vehicle loans, short-term loans, mortgages, credit cards. The number of credit trades that you have will contribute to what your credit score is. If you only have installment payment type loan on your credit history, that won't really reflect your ability to borrow and then pay back, and then borrow and then pay back. And that's what mortgage lenders want to see, that ability to do that. So therefore, it's very important to get a credit card when you can, as early as you can. In some cases, because you may not have any credit at all, you'll need to put up money to actually create a credit. So in some cases, you put up $500 and you're provided with a borrowing limit of $500. You borrow from it, pay it back, borrow from it, pay it back, and then that financial institution will then usually increase that limit for you, and then it will, as they continue to see your ability to borrow and pay back, they'll continue to increase it for you. This is very important because banks and lenders, when you're looking to apply for a mortgage, want to see that you have at least a few $1,000s worth of credit available to you. Basically for emergency purposes. Say your furnace goes on you or some plumbing goes on you and you don't have any savings, it's important to have access to some credit. Another massive impact on credit scores is credit utilization. Credit utilization is when you have, say, a borrowing limit of $500,000 and your balance is at $4,999. Looks like you're borrowing at 99% of it, right at the top. If we compare that to another person where their balance was exactly the same, $4,999, but their borrowing limit was $20,000, well, that only looks like they're using 25% of their credit utilized. Those two people will have very different credit scores. Some other contributing factors is the number of inquiries. Now, a little bit of a myth. Some people think that, hey, you pull my credit, it's going to lower my score. Next person, they're going to pull my credit, it's going to lower your score. There's some algorithms that, as long as you're not having dozens and dozens of inquiries, the first one or two will have a very minor impact, and then over time those will just correct themselves. Some other factors that will contribute to scores is if you've ever had any derogatory history. This is things like being late. When you're 30 days past the minimum payment that was, say, on a credit card, that's going to ding your credit score. If you get to 60 days, to 90 days, that's certainly going to ding your credit score. And all of that is kept in the background, a total of 7 years. So the length of time that's passed between your most recent late will impact your credit score. If you were late just recently, it's going to have a much more negative impact than if your late was, say, 2-3 years ago. The credit scores will reflect that. When you get into where now all of a sudden the credit card or loans or whatever are now at the point where the financial institution is collecting on them, they're now in R9 or I9 status, they call it. This is where it's at the point where those financial institutions are going to be writing it off. They're going to be selling that debt to collections agencies, and now you're going to be getting tons of phone calls looking to collect on those funds. That collection will now show on your credit bureau, and it will never go away until you've rectified it. That's another significant impact on credit scores. And then the worst of most is bankruptcies and consumer proposals. Those on your credit bureau, most banks and lenders will not lend to you for at least 2 years that you've actually had it discharged. So that's another very, very important piece of a credit score. And that's it for today.